Hello, Rocky Outcrop of the world. Welcome back for another FOMO-free, greed-free, fear-free Bitcoin technical analysis session with me, your host, Rocky Outcrop. I'm your friend, and a friend of yours is a friend of mine, so make sure you share this video with anyone you think might like it. And on that note, I just wanted to send out a massive thank you to the 149 people in the world who have become Rocky Outcrop. If you add me to that number, there's 150 Rocky Outcrop in the world. Isn't that just wonderful? So thanks very much, and if you're new to the videos, thanks for joining us, and welcome to the family. Let's just dive on into the chart, shall we? So here we are back in the charts. This is the Bitcoin US dollar 4-hour Bitstamp chart, and you can see that the current price above my head here, 8,814, and we've had lows on this Gregorian calendar day of 8,486, and we've had highs of 8,851. So I'll just hide that panel out of the way for now, and we can look at what we've got in front of us here on the charts. Right, this is the 4-hour chart, and you can see that there's a Fibonacci retracement in here. Now, just going to take 10 seconds to explain this, so forgive me, all the subscribers who've heard this 100 times before. But Fibonacci retracements are very good at seeing where the prices could correct to during after a trending move one way. So what you do is you measure the move itself, as we have here. So you go from the bottom down here to the top up here, for instance, in this upward move, and then you get given a series of levels where the prices could potentially go to. And now the reasoning behind that you can look up in your own time, no problem. But it's just like the laws of nature kind of thing. So what you can see is that if the prices were to retrace down past this 236, then you could be expecting the prices to go down towards this 382 retracement and then the 50% retracement. Now there's a couple of things in there I'll just qualify. First off, the 50% retracement was named is significant because you know the guy that did this US 30 Dow Jones Industrial Average, that Dow guy had a theory. He said that most often stocks retrace to 50% after they've had a move. So there you go, that's why the 50% is popular. You know, two reasons. One, he noticed this pattern evolving. Then secondly, he advertised it to people. And the more people who know about something, the more likely it is to happen in that self-fulfilling prophecy style way. Then second, the other thing that's important about these is that the 236 isn't around that sort of 20% retracement. And traditionally people look towards saying when something's in a bear market is if it's had a 20% retrace from its previous highs. And then people say, well, okay, we're in a bearish market. We've had a bearish correction. We're correcting. And people say the markets are correcting. Then technically what that means is that they've gone down 20% from the previous high, right? So that's what that means. And when they're correcting, then what you can look to see is these other targets down below. And these ones are green because it's 382 and the 618 are where people look to most often in terms of taking profits. Of course, a 382 being your least greedy target and the 618 being your greediest target, and there's a little zone in here people talk about as being the golden pocket. Now, whether or not you actually want to aim for that golden pocket yourself is your own decision. Of course, anything that goes beyond becomes more and more greedy, and then thereafter you can see things happening where you get a retrace to the say 6786 or even all the way down 100% retrace, and then you can look even beyond that to the the 100% plus the next 618 and things like that. But anyway, I digress. What happened here is we came down, we broke below the 236. Now that makes this Fibonacci valid. You can't really use Fibonacci retracements till that happens. So that happened and the prices cascaded on down here towards the 50% level. They actually went right through the 382 without meeting any sort of resistance really, or support, whatsoever worth talking about. But you would have thought that was possible because of the lack of trading activity in here and for a few other reasons, but then again you also would have thought it was quite probable that you'd get support there, and that's why it was important to sort of bear that in mind as managing your risk. If the prices broke through here, they were quite likely to go to here, but then of course this was just the least greedy profit taking zone, and you've got the Dow theory sort of coming in here at 50%. So the prices went on down, hit here, and then they retraced up slightly so far. We've been supported by it a couple of times so far. Now you may have had people saying this is a bear flag. It's not really a bear flag. It's just like a sort of channel here. You can see, for instance, it's just a channel. It's not really triangular in its or pennant style in its shape, but it's or whatever. This is a 4-hour chart, so it's not a big deal. It doesn't really matter. Then we came down here, went up, and less than a day ago, half a day ago, the prices were down here 8,400, looking a little bit sort of sketchy. Would we get closes and opens and closes below there? And if we were to, then you could expect possibly the prices to go down to that 7,900 level. So that would have been fairly sort of scary for people holding on to longs, looking to try and sort of survive the chop. And then equally, it would have been kind of slightly greedy for people with shorts to taking them from up here to sort of hold out and not take any profits here, at all. Instead, there's kind of a little bit greedy there on that front. So the result has been that we've come back up. We've touched off the 21 EMA, that's the exponential moving average, and that's this yellow line here, as you can see. We touched off it, we resisted by it, then we came up here, actually managed to close above it. As you can see, we managed to close above it, and then subsequently we've opened up a new candle up here above the 21, come down, retested the 21 EMA, and then moved on up. So that's all very positive, and what we're looking for then is whether or not we'll find resistance up above. Now, when I say resistance, by the way, I say support and resistance lines, because that's the taxonomy from trading, and it's the technical correct thing to do. But I'd like to reintroduce a new taxonomy to our Rocky Outcrop group, and that is profit-taking lines, okay, and risk management lines. Now, if you instead of thinking of these things semantically as being support or resistance, then you thought of them as being profit-taking lines or risk management lines, you'd be much better off in terms of managing your trading, really, because think about it, we've all been taught growing up resistance is futile, like the Borg say, and support, you think support's going to really come in there and help or whatever, and those semantic influences on your thoughts as you think about things influence the way that you might actually do your trading. Whereas if you thought of them as being profit-taking and risk management lines, then you'd be much more sort of black and white and binary about things, and that's probably a good thing in this instance. Anyway, we can discuss that more in further episodes. I'll always be bringing that sort of thing up, because that's the way that we like to trade here. FOMO-free, greed-free, all that jazz. So again, thanks very much for joining us for the channel if you're new here, and thanks very much if you subscribe for sitting through all that stuff that you already know, and well done, you're a fully qualified bona fide Rocky Outcrop. So that's what we're looking to first off. Will we find resistance here back at that 9,000 level? And it's fairly likely, okay? It's fairly likely that we would, and if we did, then we could potentially come back down. First off, we'd be looking to of course, see whether or not in here at this 8,690, 8,700, really depends where it'll be at that time, would act as support, so to speak, and then after that, then you're looking down to the 50% retrace level again for support. Now, if we come back down again, it will depend on what we have to look and see, assess things at the time, like how did we manage to do things? Did we just end up, for instance, if the price is retraced now and going down, we'll not even have had a higher high on the 4 hour, it'll just be more of this downwards trend, but if the prices keep going up and manage to get to here, then maybe you'd see that maybe this is starting to really look more like a proper consolidation rather than a downward 4 hour trend. If the prices go up higher than this and close up above and then come back down a bit, then you're looking at having had a higher high. So like these are the things to bear in mind. And of course, if you do get up there, you've got the 55 exponential, the 50 simple, things like that coming in there to give you a little bit of resistance up above. Now, again, like I say, profit-taking lines. If you were actually to have got in, and I'm not a financial advisor, none of this financial advice, it just seems an awful lot like that, doesn't it? But it's not. If I were as a not financially advising somebody about this, then I would be inclined to say that if you'd got in here around 8,400 with a long, then you would not be a fool to be taking profit up there at the 9,000 level. I mean, you've had a $500 to $600 move upwards in price action. You've got a few percent odd in there, which is quite good. I mean, for instance, the percentage increase today is 3.75. Nobody sniffs at that, and if you do, then it means you're greedy, and so you'd be wise enough to take profit there. Now, of course, if the prices do come up and open and close up above here, then the next target, of course, is looking up back towards that 236 at 7,950. Plenty of other confluencing factors around there, but we don't need to go into them in detail, and that's what we're looking at really overall. Now, what can we see here in terms of oscillators? Well, in the 4 hour chart, we've had a degree of bullish divergence, okay, bullish divergence, and as the prices were coming down here and testing the lower areas, last night, as it happens, I was looking at myself, I thought, yeah, there's bullish divergence there. Now, bullish divergence is a warning sign more than actually a predictor, a warning sign for people. So if you were in this site, if this was to operate as a warning sign, then for people who were shorting it, again, I apologize for speaking so fast, by the way, but I know I've got a lot to say. I want to get this done in the next minute or two. For people, warning signs, for people who are shorting it, it would have been a warning sign to say, hey, look, maybe the short might not pan out. Maybe we won't actually get down to this next level. Maybe the Dow 50% retrace line will actually come in and operate and actually provide that so-called support, i.e. that profit level that we're supposed to be working at here. Maybe we should not be greedy because we have this warning sign here, but of course it's just a warning sign, and that while these things can appear on the charts and they're very, very good indicators, very effective, and that's why I trade this way. As you'll notice in every single video, I primarily look at horizontal lines, support and resistance, Fibonacci, moving averages, and of course divergences as being the sort of the core parts of the trade in here. But yeah, so you'd be saying this is a warning sign, this is a potential place to take profit at, but it could of course have gone on down. And so many times we've seen things operate against the divergence and just continue to form more and more and more divergence, or even at some point just ultimately stop forming divergence and just go back to convergence again, regardless of the price action in the oscillators down below. But across all of them, there is bullish divergence. Okay, that's happened, that's real. So what we're looking for now then, and since we're seeing this positive price action, is to see how it pans out and how far it takes us, and therefore whether or not we're getting higher highs, and or if this is a downwards trend. And you saw me draw that channel on earlier on. Essentially, you're looking to see, well, will we remain in that channel? Are we going up to the top end of it, but just to come back down? Are we going to start to try and break out of it? All that sort of thing. Now, I've almost finished here really overall, but we're going to look at the 24-hour chart as the 4-hour chart is really a little bit of a riskier chart. We tend to actually operate on a less risky basis than that. Now, if you operate down here in the 5, 15 minute, 30 minute, 1 hour, 2 hour, 3 hour, 4 hours, then you're taking on a lot more risk, because the price action that you see there and the indicators that you use are a lot less reliable at anything down in these levels. I mean, even the 24-hour itself is fairly unreliable, and of course the charts themselves are not predictive. So when you try and make them predictive and then try and force that predictive nature onto them at an even more lower time frame, where you're inclined to have more volatility on a relative scale, then it's less likely to work out for you overall, when in fact it's commonly agreed amongst successful traders that the charts in and of themselves are not inherently predictive anyway. So on the 24-hour chart, I think there's a few things that we can really just wrap up this by looking at here, and you can see there's this white dotted line. Now, what is the white dotted line? If you've been watching along, you know that that's the 200 simple moving average, and we've now come up above it. So when this happens, we can often have what we're looking for here is to have opens and closes above this 200 simple moving average, so that we can try and establish it as support, so to speak, and or we could say as well that we're trying to establish it as a profit-taking line, if you like, because if the prices do come up here and get rejected from them, for instance, or here to the 55 moving exponential moving average, or here where the 21 yellow line is, where that exponential moving averages as well, in around that 9,250 level, which we know from previous price action has been an important level. They could easily come back down again, and if they did, they could very well retest off of this 200 simple moving average. So that's curious, is that we've come up above here. Let's see how the day pans out and how tomorrow then responds to that. And I would anticipate this 200 simple operating as a profit taking line for people who perhaps have opened up shorts at around that 9,000 level, or even indeed if you were trading this, again, I'm not a financial advisor, you may have been inclined to have actually shorted it around here at the 8,750. It would be perfectly reasonable, make a lot of sense. Then you might tolerate that trade right up until the 9,000 level before you start thinking, maybe that's not going to work out. And then maybe actually what would happen is it might look like it's breaking up there, come down, wick off of this, you might then exit your trade at break even, and the prices may continue on up. You never know, these things happen, and frequently they happen in that sort of a way. In terms of like divergences or whatever, you can't really see any here, because we're on a downwards. If you use this as your downwards trend line, trend channel or whatever, then yeah, sure, you could say, look, here's the bottoms here, bottom here, and they're all just lining up. It's more or less convergent across the board there. And in terms of the tops, we aren't getting any higher tops here, so there's no bullish, hidden, bearish divergence there, so no continuation signals coming from the divergences there. So it's just kind of more or less neutral. Instead, we're looking towards the sort of the beginner use cases for the RSI and stochastics and stuff like that, and trying to look to see whether or not what zones they're in and the shape of them and things like that. Of course, the most sophisticated way of using these is for divergence, and that's the most accurate, and that's the way that people use them. But the other thing that everybody kind of looks towards is whether or not we'll be in oversold, overbought conditions, things like that, and other badly chosen phrases from the world of technical analysis. I don't think any particular name from anything, I don't think any of the taxonomy is really well chosen, to be honest. Anyhow, we'll be looking for is in the RSI for it to come up here and to test off of its moving average. I have a moving average on my RSI. You can see it's a fairly handy thing to have, and we also have the top of the bearish control zone. So let's see if we can get up here, test off of it, and then we probably get rejected on our first pass, because isn't that something we say on this channel all the time? In which case, You could foresee that happening in and around this 382 Fibonacci retracement line. Likewise, we're currently in the oversold conditions. We were looking yesterday and saying, well, we would need this to tick around, and it looks like it has ticked around, and that's very good. Well done to it, despite the fact that prices were going down at the time. So jolly good to you, old Bitcoin-y old pal. And we want to see that now that these have crossed around, as you can see, when the blue's on the upside and the purple's on the downside, then that's an indicator of the direction of the trend there somewhat. But of course, we want to come up here and see if we can actually break back into this coloured box area rather than being down here in these very bearish condition areas. Now this is called oversold, and that's part of that stupid taxonomy I was talking about. But of course, oversold, I mean, what does that even mean? It's a really bad, it's a type of phrase that people who are in the know like to bandy around in order to keep everybody in that 96% of people that lose money trading category. Even though they're smart, they're saying, but you said that was oversold. Actually, just think of this instead as being incredibly bearish. When things are incredibly bearish, they're kind of likely to get a little bit better. It's like that whole hit rock bottom, or where is only downhill or uphill from here. Those sorts of phrases from life. It's more like that. But when, of course, yourself, if you've ever had any difficult times in life or trauma or anything like that, that so often you think you've hit rock bottom, and then the next thing comes along and you realize, oh my goodness, my rock bottom's actually lower down than that even still. So that's what can happen down here. Be aware of that in general for future trading. So I think I've summed everything up really. I apologize that I didn't sort of like make it maybe super obvious or super clear in terms of like sort of writing out the numbers or something like that. Let me know down below in the comments down below if you enjoyed the episode and if you think that you actually were picking up on what I was saying there. Of course, I am looking towards this on the daily time frame. I'm looking towards right where the mouse is right now, 8,732 or so for today, to be sort of like, let's look around here and see how that operates. Of course, as well, the other things I'm looking at are this green line here at 8,950 and everything I mentioned up above, and of course as well I'll be keeping my eye out for that 8,400 level, because sure, if this all turns around, comes on back down again, and the downward trend continues that we've been in for the last couple of weeks, then we would see the prices come down here. And if they did come down with a degree more momentum, for instance, the oscillators had reset somewhat and they came back in again, or they rejected off of this other zone and back into those so-called oversold conditions and that sort of a thing, it may have more momentum and may break down here, in which case you'd be looking towards the 7,000s area, because you'd be making a lower low on the daily time frame as you go down there, even compared to even over here. So thank you so much, and I'll be doing other videos today as well, of course, so stay tuned to the channel if you like other altcoins, and of course if you only trade Bitcoin or whatever, like, subscribe, all that sort of jazz. I do this every day. Thanks so much for tuning in. I'll see you next time.